In this video, I'm going to show you a simple price action strategy that you can apply even without massive market experience. This video is sponsored by Forex Tester 5, which are the only partner I have out of the hundreds of companies that have contacted me. Now, I only want to create partnerships with companies that are going to provide value to my viewers. And Forex Tester 5 so far is the only one of those that I've really wanted to partner with. Now, Forex Tester 5 is a backtesting platform, and as a massive advocate of backtesting, I think they are the best one that I've ever used. But more about that later. Let's jump into this strategy's backtesting session. Okay, hello everyone. We're here on the backtesting session now, and this was basically me having a play around and looking at a simplified approach, seeing if I could put something to you guys over here on YouTube, but something that was super easy to apply so that I could provide you with something useful. Now, this is done on Forex Tester, so throughout as well, I'll show you the benefits of that. It's something I, push towards a lot of people because backtesting is the one big thing that most people lack. Backtesting is super important because if you want to know if a strategy works, first of all, you need to trade it. And there's no point trading it in real time and taking months to collect data and losing money along the way when you can backtest very, very quickly and effectively with a platform like this. So the idea behind the system here is basically we are looking at three things. We're looking at structure, we're looking at imbalances or market efficiency, and we are looking at supply and demand. The first step of this system is going to be to make sure we are with the trend. So we want to follow the structure, looking at lower lows and lower highs. Now, if we look at this screen, we can see over on the left, we have that down move. Then we have this slow pull back up. And now we have another down move, which has broken that hourly structure. So we're looking around the hourly and 30-minute time frame, which is where I would say is best for a system like this one, because it's not going to be too fast moving. The idea behind this system is to simply sell supply zones in a downtrend or buy demand zones in an uptrend and target the next low. So it's very easy to find your buying or selling point, and it's very easy to find your target. One big thing we also want to do is make sure we are looking at the zone that broke structure. So you can see in this example where I've just put those red lines on, that is a zone, and just below we had that break of structure with the wick before another small 2-candle consolidation, those two blue doji candles, and then the bigger sell-off down. Now we can see that we've made a low where I just drew that last red line, and what we have from there is a push to the upside which shows a break of the substructure. So this is how we're going to determine the low of this current move. When we get that small break of substructure, which is where this current candle has just broken over the previous structure, that is exactly where we are then going to be looking to place our sell orders on, because we know that we have essentially the low for our target. So next off, we see a push to the upside, and that's hopefully going to trade us then into the supply, which in this instance it does. And then we get tapped in on supply, and we use the last imbalance supply at the end of the move on the zone that broke structure. And then from there, we sell down with the stop loss over the high and our targets down into the low of the move. So there you can see the trade worked out. We had the sell on the supply over there on that doji candle at the top. We sold from there. We had a stop loss over the high and we targeted just the previous low, which is this line I'm drawing on now, because this is now the next break of structure. So for the next trade, we would look towards the zone that broke structure, and we have two kind of areas here, which we're going to look at in a moment. The first one is this one I've just marked on. And then you can see there is actually clear imbalance into that zone above. So for this trade, I actually opted for the zone above rather than the one that is actually marked on the screen at the moment. Now, this was kind of a picky move from me, but this is risk reward based, right? The risk reward on this kind of trade, as you can see right now, is not too good. And I thought, well, I could go for the imbalanced area, hopefully get that tap in. And then if we do get the tap and sell out from there, we're going to get much better risk reward. And there's still a lot of valid reason why we should go back there, because there's still imbalance leading into it. And it is, of course, the last imbalance point in this current trending move. So this is the setup I actually went for. And now I'm placing the levels, and as you can see, it's exactly the same concept as the last one. We wait for a break of structure in line with the trend. In this instance, we're in a downtrend and our hourly time frame is making lower lows and lower highs. We decide to sell from supply. We have a stop loss over the high, and then we can target that down into the low of the move. Now, why do we target the low of the move in this simplified system? The reason for that is because we are going to get a nice risk reward without pushing our luck too much. We're not looking for a major push down, and we don't have to then identify lower targets. We can just look for a clear takeout of the lows, which obviously if we're going to continue the downtrend, which at the moment we are, we should of course be taking profits there, because it's very likely the market is going to move back there. So this one has now been tagged in. As you can see, we did push quite close to stop, but we didn't hit it. That's why we want the stops over the highs always. And then we've had that push down and continuation of the trend. Now, the beauty of this system is every time you win a trade, that means that the structure has broken once again. If the structure breaks, that sets you up with your next trade because now you know the trend is continuing. Now, eventually the trend will turn on you. And when that happens, you're going to take a loss. But the trend turning can actually turn into a new direction for future trades. So obviously we are looking here to sell because the market keeps making lower lows and lower highs. But if we lose a trade, that means that the structure has broken to the upside. And then with a break to the upside, what does that mean? Well, we can start looking for buys with the higher highs and higher lows of the market if we can then see that there's a clear trend in place. So for this one, we have a couple of areas we could look at. Now we have obviously the move right at the top, close to the previous sell. And then we have this lower one, these two red lines that I've just drawn. And the reason I would go for these two red lines that I've drawn on here is because it's the zone that broke structure. So this is what I would call redistribution. We had a sell-off from that spike at the top. We came back down, we consolidated sideways, and then we had a big sell-off. And it was from that consolidation that the structure actually broke. This is a key part of the system, selling from those redistribution zones as opposed to selling from the extreme every single time. Because if we sell from the redistribution, this is where the sellers that were able to break structure came in. This is where most of the selling pressure came in, as opposed to the top of the previous move. So this sell limit that we have now is prime positioned in my opinion, and this is hopefully going to come through for us now. But as you can see on this setup, it didn't quite tap in. So this was a missed opportunity. Unfortunately, because it was all sized up quite nicely, but the market just did not want to go and fulfill that final price region. So unfortunately, this was a miss. And now obviously with any trading system, you are going to get a miss. Now what you saw me do there was delete the order within Forex Tester 5. Everything within Forex Tester 5 is tradable just like real markets. And that's why I like it so much. It's set up just like MetaTrader, as you can see. We can place pending orders, we can remove pending orders, we can modify orders. We can also have a look at open positions, which we're going to do in a minute. So you'll see the profit rolling on the position. And when we do that as well, you'll also get to see what profits we've made so far on this testing account. So back to the strategy real quick. We've had once again a break of structure just here. So what I'm going to do is use the graphic elements to draw that line on so I can see the break of structure coming in there. And now I'm targeting up the next sell from the supply there. And once again, think about it, redistribution. We have that supply at the top, we have a small sell-off imbalance, but then we have an efficient range and then a big sell-off, and that's the sell-off that broke the structure. That's where those two red lines are drawn with the entry and the stop loss. So that is exactly where I would be looking to enter in this kind of trade, because that is where this selling strength really came in. So I've just refined up the entry a little bit there, placing the pending order on. Now, one of my favorite benefits of Forex Tester 5, which speeds up the process so much over the other backtesting softwares I've used, is what you can see there on the screen with the red writing. Calculate with risk percentage. Now this, in my opinion, is absolutely brilliant, because what I don't like doing when I'm backtesting is have to have a calculator open to calculate the right lot size for my risk on every single trade. On Forex Tester 5, I can simply click that button, set it to 1% risk per trade, and then every single trade, it's going to risk the exact correct amount. So that speeds up the process massively. Now, before I was using a different backtesting software. I'm not going to go into names. I'm not going to slate any companies, but it wasn't as effective because I had to sit there with a calculator open on a different tab and calculate my risk for every trade. This probably chops an hour off every of my large backtesting sessions that I usually would have just spent messing around with different tabs. So I really like this one. Now, this trade specifically that you just saw come in there, the reason that we didn't close the order, even though it made a lower low, was because if we look to the center of the screen, we can see 1, 2, and maybe 3 equal lows. Okay, we see that floor of equal lows, and then the spike through that made the lower low closed only with wicks. So this shows me that this was probably a liquidation, and because we hadn't hit any key areas of supply, we could still obviously sell from there. What we saw was liquidation, then a liquidation of the high, which was where our sell was tapped in, and then we sold off exactly how we wanted to and brought price all the way down to the target. So that was a nice winning trade, and that's just a little tip on liquidations as well. It doesn't always mean a trade is invalid with a break of structure if the market's showing you liquidity, equal lows for example, and also obviously the wicks and the momentum pushing back into the range. You could still go for a trade, but just target the end of the liquidation instead. So this specific setup that I'm looking at now is looking to be executed from the supply. Now you can see we had a break of structure. This one wasn't so much of a liquidation. This break of structure was then going to lead me into another sell. And if you remember, as I said earlier, in this kind of system, when the trend breaks, what that actually does is shift the trend. Okay, that shifts us into a new direction. Now at this point, we hadn't really had a full break of structure. But very shortly after, we did, okay? We started to push to the upside, and what that did was actually shift this trend from down to up, and that is the point of which that happened. As you can see, we broke above the structure point there. So this has now actually moved from a downtrend into an uptrend. And as previously mentioned, this does not mean that our strategy is ruined. This does not mean we have to panic. All this does is lead us into a new direction. So this trade was pretty much ready to enter straight away from this demand zone. As you can see, it's the demand zone that broke structure, and it's also the last imbalanced demand zone in the major move. The target for this one was a little bit more tricky because we had to push it all the way up towards some previous levels on the left. Otherwise, it would have been like a 0.8 risk reward. This is obviously not something you have to do yourself if you were to apply this simple system, if this is something you're looking to do, but obviously it can increase the risk reward if we go for some previously imbalanced areas. So what I actually decided to go for on this trade was that area that we missed the sell on earlier, because I can see here that this still needs to be filled because it's an open imbalance in the market. So I decided to opt for that for my target, for my trade. I placed the stop loss just below the low of the range, and my entry was just on pretty much a market execution as to where the market is right now, around 0.6155. That is going to be that 15-minute demand zone. And another great tip from Forex Tester 5, another thing you may have seen there, when we go to the 15-minute time frame, the analysis crosses over. Now, another problem with some of the other backtesting softwares is that the analysis does not carry over from chart to chart. So you end up with the problem, you analyze the hourly, you go to the 15-minute, and there's no analysis on there. It's a nightmare. So it's very annoying, and that actually is remedied with this. Now, if you look down in the bottom, you can actually see the running profit on this trade. At the moment, it's flicking between, it's $136 at the moment. You can see that moving with every single pip as it would in real MetaTrader with real money in real time. Now back to the strategy for this trade. Because we made this slight lower low, I actually decided, you know what, let's just ditch this position. We'll get out now. We've taken, I think, 3 or 4 wins, or 3 wins so far and 1 loss. And then we've had 2 missed opportunities. The one that was right at the start of the video, and then the one just at that previous imbalanced high that we were targeting now as well. And now what I'm opening up is the statistics window for our trading session. So this is going to show you the kind of effectiveness of the system. Now this is obviously a very small sample size. This is only 4 or 5 positions. And that is really not going to give you the biggest view into your trading, which is why I like backtesting so much, because in real time, it could take you a couple of weeks to get these 4 or 5 trades. But in backtesting, you've just seen me do it in about 15 minutes. Now, if you sit through a backtesting session for, 2 hours, 3 hours, or just go back to it for an hour a day, the amount of data you can collect, and I cannot stress how important this is huge. You can collect years of data in a very small time span, and you can actually see whether a system that you are applying is a working system or not. Now, obviously from this small sample size, you can see we have average winners around 4 times bigger than the average loser. We have an 80% win rate, and we had 16% return over the 5 positions. We had 4 wins, 1 loss, and 2 misses. I believe if you took more trades, the profit probability and the win rate of this system would probably move down closer towards around 60 or 65%. That's simply because sometimes when you get caught in a consolidation range, you're going to get caught up and you might take 1 or 2 losses consecutively. But generally, as a trending system, this, in my opinion, is a very good way to go about it. We can look for, first of all, which direction is the trend moving. And then when we have a clear idea of whether we're in an uptrend or a downtrend, from there, what we will do is actually then look for breaks of structure. Then we will find imbalances leading into the zones that broke structure and place sell and buy limits there, as you've seen throughout this video. So there's a couple things to take from this video. Number one is this simplified approach to trading, just to show you that it is possible to actually trade in a very simple manner, simply looking at structure, supply and demand, and imbalances, and nothing more. Very easy, modest profit taking, and a very easy system to actually apply to the markets. Now, the second big important thing is backtesting. And I stress this a lot in my videos. I've made a lot of videos about backtesting, how to do it, and the importance of backtesting. And the reason I do that is because no one does it. I mean, that's a generalization. Some people do it, but it's very, very rare that you actually see someone backtesting. There's a lot of traders lose. And the reason they lose is because they have no idea whether their system works or not. So getting yourself a good backtesting software and digging into backtesting is going to really pay you dividends in the long run if you're looking to get funded, if you're looking to build personal accounts, and if you're looking to become a successful part-time or full-time trader. So what do you think of that simple strategy? Is that something that you are going to try and backtest yourself? Or do you not really agree with it and you don't think that you're going to apply it? Let me know in the comments. Now let's have a quick talk about Forex Tester 5. If you've liked what you've seen in this video in terms of the backtesting platform that I used, I highly recommend that you go and grab a package from them. The platform itself is not expensive, and it's going to give you a place to backtest that automates pretty much everything for you, as you've seen in the video. You can automate your risk management, you get multiple time frame analysis, you can analyze years of data across hundreds of different assets, and all of the results are going to be collected automatically. So it makes backtesting a breeze, and because it's in a MetaTrader-like setting, it's very realistic and it's easy to get immersed into it as if you were trading live. Now I have to say thank you to the team at Forex Tester 5 for providing me a discount code to give to you guys so that you can get access to your packages for cheaper. So if you do like the look of Forex Tester 5 and you want to take your backtesting and your trading seriously, head over to the link in the description. You'll find the code there, and you're also going to find a link straight through to Forex Tester's website so you can sign up. I hope you've enjoyed this video and I hope I provided you some value. Thank you for watching. Thank you for listening. Please drop a like if you've enjoyed it and make sure you check out my other videos because there's tons more value there for you. So thank you for watching and I will see you in the next one. If you enjoyed that video, make sure you check this one out as well. There's way more value waiting for you, just one click away.